Hi there, my name is Greg Laxton and I'll be highlighting a few key aspects of Tencent's 2018 interim results. We arrived at our recommendation based on the following. We feel that a high growth rate has already been priced into the valuation and we believe that Tencent is fairly valued. Accurate forecasts are difficult to make due to the regulations set in place by the Chinese authorities and to the slower growth in the advertising market as a result of a more difficult macro environment. This will impact both the gaming and the advertising operations, which are likely to be the primary contributors to sustained earnings growth. The group's PE is trading at a discount to its historical average. However, we estimate that growth is likely to be lower than the historical 5-year compound annual growth rates of 35% due to the higher base and the maturity of the online advertising market. We feel a lower PE multiple going forward is appropriate. Even after the recent price declines in Tencent, the group is still trading at a substantial premium to its international peers. We feel the current market expectation for revenue growth is optimistic, given the slower macro environment and the potential impact of regulation. Despite recent downgrades to earnings estimates and the expected net margin, we believe that current earnings estimates are at risk. Tencent is currently not in the Dow Jones Global Titans 50 index, and we have a neutral recommendation. Looking at debt, the net debt decreased by 46% to 7.205 billion yuan. Net debt to equity fell 3.8 percentage points to 2.4%. The total debt to EBITDA remained low at 1.55, with the group receiving net interest. The weighted average cost of capital almost doubled to 13.94%, while the return on invested capital only increased by 1.73 percentage points to 15.8%. The economic value added has therefore been declining, indicating that the cost of capital used is nearing the earnings generated from investments. Looking at earnings, revenue increased by 38.7% to 147.21 billion yuan. Adjusted operating profit increased by 27% to 40.27 billion yuan. The operating margin declined by 250 basis points to 27.4%, and the diluted headline earnings per share increased by 25% to 430 cents per share. Looking at the company's prospects, the group aims to increase contributions by publishing China-developed games internationally, with the games Arena of Valor and PUBG Mobile believed to be highly suitable for international expansion. However, management expects any meaningful impact to take several months. There are signs of ongoing growth in the number of daily active user accounts playing the group's mobile games, and management believes that monetization per daily active user account offers substantial upside to match levels seen by peers. Chinese authorities have frozen approval of new games and have prevented Tencent from making money on existing games, with no clarity as to when the regulatory blocks will be removed. The group announced in the beginning of October that it will be restructuring its operations. A new group will be created to focus on the cloud and smart industries. Another new group will combine the social media, mobile internet, and online media operations to try to deliver more strategic coordination. The technology committee will also be created to focus on research and development and to push for innovation. Our portfolio guidance is as follows. The current Dow Jones Global Titans 50 index weighting of Tencent is 0%, and because we do not recommend an active position, our recommended portfolio exposure is 0%. Before I end off, if you would like to trade, then please contact our trading desk. Investors are reminded that they can refer to our online trading platform, which contains a more in-depth analysis on Tencent's 2018 interim results. For more information on how to interpret a trade idea, visit the events section on psg.co.za to access previous trade ideas and how to understand the method of analysis we use. Lastly, I'd like to bring your attention to the following disclaimer. Thank you very much.